Alright, hey, on this video I'm going to make a little, just a trial, play with the reversal catcher system, reversal catcher strategy system settings, and see if we can find something that would work for, and I believe we are gonna find something that's going to work for the bullish turns on the 3-day chart of Apple. Why 3-day chart? Well, Apple has been falling, and on a 3-day chart we have already won. Got in a direction changes, a trigger triangle, but the momentum didn't turn yet. Now we are back to the, I believe this is 50 period simple moving average, still falling. If you look at this, there's kind of a W bottom, so double bottom shape that could be the place that holds. And now, based on these kind of things, it starts to look like a potential reversal could happen somewhere here. Also, the momentum is already well below zero, which is usually where we may start having these sweet reversals like here. This one was not such a sweet reversal, but also there was no trigger triangle and color change at the same time. So let's see what we can find. So I've got the reversal catcher strategy system added to my chart. If you don't have it yet, you can find it in the indicators in the invite only scripts. There you've got reversal catcher strategy system private. If you're a subscriber, I believe I will maybe not publish this anywhere online, but if I do, if you're watching this on YouTube and you're not a customer yet, of course you can just come on our website and become a customer and start using this amazing tool. But assuming you're watching this on the private members area, you should already find it in your indicators, invite only scripts, and it makes sense to add this little star there so that it goes directly to your favorites. And when you've added it to your chart, you can open the settings, and what you want to do first, I'm gonna do on this one, I am going to just trade stock, not option stuff. So I'm gonna use simple trading mode. For now, I'm not going to touch the fast trend and slow trend moving average lengths. So the green one is 8 period exponential, and the slow is 50 period exponential. One day I will make it possible for you to pick between exponential and simple, at least, if not also some other moving average types. But for whatever reason, I decided to build this, make it built in to use exponential moving average. I'm not sure why I did it, but that's what I did. Anyway, let's put the data box on. So we see some sort of starting point with some sort of settings that I've got here. Straight out of the gates with whatever I happen to have in place, the bullish trades are profitable and the bearish ones are not profitable. The hit rate here is around 60% and here it's 40. Well, I'm mostly interested in these bounces now, so let's play with those and leave those drops out of the question to keep this a bit shorter. But technically, whatever you see on the bullish side, soon you can replicate and play in the same way for the bearish side. And even if we get the bullish side working, it's possible that there are no good bearish settings. Or it could be the other way around, that if we could not find good bullish settings, well, we kind of already did without doing anything. It could be that we find great bearish settings for some time frame, for some stock, and we don't find good bullish trades. So let's get going. The current trigger is got in a momentum bull turn. So what does that mean? Whenever there is a turn to green, this enters, whether it's below zero or above zero, there's a bounce in as well. We're not looking at the current direction changes here. One test that I could do, well, actually, I'm gonna go below. So now we know how it triggers. I'm not sure if I like this trigger, because I'm not sure if this is a great place to enter. Here it would have been, but I generally like these below zero turns more, so that it has really made a dip and then it goes again. I may be stupid when I think this way, and I will be very happy to let data prove me otherwise. The trade runs until defined duration, not until expiration. We could also play with this. Now it's 10 candles, so if we're doing 3 days, it's roughly 30 days, 30 trading days. So that's a bit short. I could think about increasing this, because for example here we've got a trigger and then it exits, it lets it run higher before buying again. So I would maybe like to just come in here and hold until something happens. What could that something be? I'm not sure if there is an exit trigger on a break below the 8 period here, but that looks, when eyeballing this, looks like a pretty solid one, because so that would have been, the exit would have been there. I wonder if that's available as exits. I bet it's not. So we can't use that yet, but now that I've seen that it's missing, I would like to add that so that we can make another video and see if that would give better results. Right, so that was it. 10 bars for now. Targets are from risk multiplier. I'm not using expiration targets because that's for options trading only, but profit target is 3 times the stop, and the stop is 10%. Well, the stop is a bit far, so usually here is the stop. Well, is it really far? Actually, not so. If I buy here, the stop would be here. I could bring that a bit closer, maybe, or maybe not. And the low finder distance is that it's looking at the 8 bars behind, checking the lowest point, and then putting 10% below. I like that logic. So whether it's 10% or something else remains to be seen. So maybe the first thing I would like to do is give you a bit more time. So I don't think 10 bars is enough, unless we're doing some kind of option trading stuff and playing with really short-term expiration stuff, like 1 month, 40 days to expiration. But on a 3-day chart, that's not what I would like to do as my first idea. So I'm going to bump that to 15 and see what happens. Improves. So now expected return is 5%, 17% on a win and 12% on a loss, 60, 40. Let's give it 5 more days. A big increase, both on the win probability department and as well as the average win size. I'll go to 30. What happens now? Still improved. Did this improve? I'm going to go back and check. 26 and 17. That was 19 and 14. Okay, the wins are growing. So that was 26 and 17. Better expected return. The win rate started falling. If I go to 40, that's 120 days. 35, 18. This is improving quite a bit. 13 and a half. Somewhere in this range. Oh, that was much better. Expected return 13%. Now it's only 8.2%. So giving more time seems to be the way to go. 13 and a half. If I go to 50, what do I get? 15.3. All right. And now the trade already runs, when it's a winning trade, it runs 44 times 3, so 132 days on average, while the losses are a bit quicker. 19% loss on average. Would I be happy to take that? I'm not sure. I'm not sure if I would. Let's see what happens if I reduce the stop. Let's say, let's put 8%. The win probability, 63%, 62.5. Here we get 60%. Did the expected return change much? 15.5, 50. Oh, it got better. So you see, we have an improvement here. Right? If I bring this to 7, 15.5 goes to 13.4. Okay, shouldn't bring that down much. 8% and 9%. Okay, 8% seems to be the sweet spot, roughly. I'll run this down just to see if if it kind of makes sense. 13, 13, 11, 11, 9. Okay, I think the 8 makes sense. Low finder distance. I'm going to play with this a bit too. If I look back a little bit less. Worse. Better. Didn't change. If I go to 9, 14, 8, 15 half, 16 5. Now it's over 60% win rate, so I'm kind of liking this. If it goes back to 8, it doesn't change so much, so this is not, put it where you like it. I don't know if this matters so much. I'll maybe give it some more space just to see what happens. Doesn't change much, but I like the improved win rate somewhere in the 12 range. So, well, didn't change much. 13, 61, 8. Bounce is 76. as you can, I don't think this will limit it. So now we're just letting it run. So there was bounce in, bounce expired, right? Okay, that looks a bit funky. Looks a bit funky. Yeah, well, that's happened. How about cutting out of the trade if current momentum turns, or would the trigger become stronger if we also require flexible KDC bounce trigger means that the turn and this needs to have been pretty close to each other. So that would be one thing I would like to try. 6.3, much worse. There's a bounce in because there's a trigger and a change at the same time. There's a bounce. Why is there a bounce? It shouldn't be. What the heck? Now it doesn't make any sense. There should be no bounce in here if this would work the way I want it to work. So that doesn't make sense. I'll need to add that to my list of going through and seeing why it does what it does. Because what this is supposed to do, I wonder if it's explained here, allows momentum to turn slightly later, but it didn't turn, so it should not enter here. What it should do is to see that, okay, there's a trigger here. Let's see if within the next X bars the momentum turns, and when it turns here, I think that's too late for the logic. So this is clearly not working. I'll take a note. There. RCSS fixes. KDC Flexi bounce looks to be broken on 3-day charts at least. Verify code. Fantastic. It's good to make these videos because I'm troubleshooting my own tech at the same time. So let's go back to the K and bull turns and see if we would like to require as well KDC bounce trigger. 20%. This improved it quite a lot, but now the blue is not okay. So if I go also bull warning, made it worse. So the wins are on average 40%, losses 15%. These are fantastic times to be a buyer. So that would be just like that. That looks amazing. Because now we're catching this bottom. We're not catching this bottom, even though catching this bottom would have made sense. We're not triggering here, which is great. We're not triggering here, which would have been all right. I would have liked the Flexi bounce trigger actually to catch this, because there's a trigger and then there's a turn pretty soon after. So that would, when the filter works, this should catch it. This is a bit far, so probably not. There was no triangle at the same time. No triangle at the same time, it's not buying it. Here, this triangle and this turn are close enough to each other. I would have liked this trigger. Ideally, when the code is fixed, it would. But now this is pretty good. But I'm going to remove that for now, because that's one idea. You could play with that. Now there's the bull warning, I believe, and I'm going to compare that with the bull turn. Bull warning is 14% expected return, and that waiting for the green is 16% expected return. So maybe waiting for the green makes sense. Of course, if you're kind of legging in using stock, you've got a bigger account. Starting to collect somewhere here on blue and adding more when there's a green could make sense. If it goes back to maroon and starts crashing down, then you just get out and wait for the next signal. That's how you could do it. But imagining that you're trading a small account and you just want to enter like a surgeon and exit when it's a good time, this could be the setting that gives better returns for now. I need to fix the Flexi bounce, however, because that's generally been a very good trigger when it works. So now I've done something stupid on the development side and I have not tested this properly. So pay attention, and I will release a new video as soon as that's fixed. And by the way, I'm going to add also, there are these triggers like doji. That's just a test, but I've got a ton of candlesticks already modeled. So I'm going to add them as triggers so that you can see how, for example, bullish engulfing candle happening at the same time with a KDC trigger, or that sort of color change, if that would be a fine way to enter trades. But how about exits? We don't have any indicator exit rules. So what if we would enter here and exit when it has run? Does it make sense? That would be the KM exit rule. So let's say downturn warning. What happens? Becomes a lot worse. I don't like that. A downturn. Not very good. I don't like that. Downturn above zero. How about you? Not very good. Okay. Falls below zero. How about you? Already better. So now we're holding for the wave to go and then really start heading down. It has a grace period of 5. So let's see if a downturn, a confirmed downturn after, let's say 10, because we're letting this run to 50, would make it better. No, 30. Not really. Falls below zero. 30. 15. Let's see what happens. 11. Good to give it more space if we even want to use this. So that's now 13. 58. It made the win ratio and the expected return, both of them falling and below zero. What about this? 12.5. How about if I remove the grace period? Oh, not very good. Not very good at all. If I make it 5. 10. Maybe I'll just remove that altogether. 61.8. That's the best for now. KDC exit. Sell trigger. And we wait. Let's say 30. Okay. I'm not sure if it improves. The losses are 17.3%. And this guy is without any filters. It's smaller, so the losses become larger by applying these exits. Maybe better not to. Now we're already on the bearish entry side, but what if we do some multi-timeframe stuff? So now we're watching the 3-day, maybe watching at the monthly at the same time. Could make sense, or maybe it doesn't. So if I buy only when the monthly is rising, it becomes a lot better. That makes sense. Rising and below zero. So monthly has just reversed. This is bad. Rising and above zero. 23.4. That looks pretty good. Rising above zero would be a very, very strong one, but also the rising alone is pretty good. How about simply above zero? Not bad. Not bad at all. I would like to do rising or above zero so that it would give those two words when the monthly has fallen and it's the monthly dip buying time. So that would be one, and then whenever it's above zero, just like heading higher during the normal bull market regime, I would like that to be also allowed. But okay, I'll take a note. MTFA rules allow KM rising or KM above zero and similar filters. 2. That's a good one. Well, I'll leave it like that maybe, because that was better than the original, right? And I don't think the monthly is yet above zero. If I put rising above zero, well, there was one. But if I take a look at the monthly, secondary time frame, let's put the monthly on. The monthly is rising and above zero, so knowing how strong that has generally been, actually this would be the setup that we would have now pretty soon. So 76.9% winning rate, 23.1% loss rate. Wins are over twice as large as losses, which is really solid, and the overall expected return is insanely good. I like this. I like this a lot. The slow momentum filter. I don't think I want to add filters because the bounces are down to 26. If I take this away, it's already filtering pretty hard. If I take that away, it's 76. So it's taking out 2/3 of the trades. Just like, you know, more or less pulling the number out of my head. But it's roughly there-ish, maybe. And I think I'm gonna stop here. So these bullish setups pretty strong. The monthly is already heading higher and above 0. So when we've got the next one, this would be a thing that triggers. Of course, I could still play with these if I like to, but I don't think I like to limit this anymore. And now I've got this down. I've got this down. Now I'm kind of losing my thoughts. So if I right click, for example, somewhere here, these are the stop dots related to my indicator, or I just right click here in the data box. I can add alert on this particular setup that I just did. So I could say buy alert, trigger on a buy alert once per bar. And I'll make it an open-ended alert, so whenever this happens, doesn't matter, I want to get alerted about this. Alert name, Apple 3-day reversal, coming, pay attention, something like that. And the secondary time frame would be, because I didn't figure out how to pull this from the setup, monthly. So there we go. All others are pulled directly from your settings, but if you want to see the secondary time frame, you need to put that manually, because I didn't manage to code it in so that it would pull it from your chart. So that's how I would set my buy alert, and I'm going to create that because this is a new setup for me and I really like the setup. If I'm publishing this on social, and I believe I might, because this is pretty cool, even though it shows, well, also because it shows how I'm doing this development. I notice something that is wrong or that I would like to add, and I'm just taking a note, and then I'm going to add that. So maybe that helps you understand how I'm doing this, and maybe builds some sort of trust with me as a vendor, technology vendor. So go to optioninvestors.club if you want to learn more about this thing and how it works. You head over to free resources, and you've got these sort of masterclasses here. This how to accurately catch market turns shows more about how you could use this reversal catcher strategy system. You click on discover the process and you sign up for the masterclass, and then there's, you know, when you watch the class, then you can start a trial and start using this amazing tool, and you will get access to a private members area with this sort of videos where I walk you through how to set up cool charts and also some other things. And of course, I'm adding more material all the time. Plus, as a subscriber, of course, you will always get the newest updates and that sort of things. And anyway, I'm very happy that you watched this video, and if you're a subscriber already, I really hope this setup and all the other stuff that you can figure out using this system will help your ROI become better than you've ever experienced before. At least for me, this is what has happened when I developed this system, and I really, really hope it does the same for you. That would be amazing for you, and I believe that way you would always stay my client, and that would be a really, really solid outcome for my business as well. So there's a win-win-win. I don't know how many wins there would be, but anyway, best of success on the markets. Use data to back up your decisions. I think that's clever. When something has worked for the past, I don't know, 30 years, it may not work the next time, but chances are that when you find something that wins almost over 75% of the time, maybe it keeps on working. For example, when you have something that works only 40% of the time, maybe this is something that you want to avoid. So trade the consistent winners, avoid the consistent losers, and this way, over time, you should be able to see pretty solid compound returns when you size your risk in a clever way and all that good stuff. See you around, make a lot of money, and have fun. Bye.